What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting and trading method that we use can be used with any publicly traded company in the U.S. stock market. Our nightly videos focus on identifying the triggers and targets for trades ranging from scalps and intraday trades to long-term swings and leaps as well. So if you want a deeper dive in how we set up our charts and trading levels, check out the bonus content on our YouTube page. And for more information about the strat, which is the base of our charting and trading method, you can find more free information in the description of this video. So let's take a look at today's agenda. We're going to recap today's intraday price action, look at the market maker's expected move for tomorrow, Friday, September 16th, and we'll zoom out real quick to look at the week, month, quarter, and year perspective of SOXL's price action, and then we'll zoom back in to set our 4-hour markers and the triggers and targets for Friday, as well as to review the triggers and targets for the week, month, quarter, and year. So getting into the charts here, we're going to zoom into the 1 minute. There was a couple of reasons why we were looking for an early entry in today's price action, and probably more of a risky play than, well, not probably, it was more of a risky play than we normally take, right? So when we look at where opening print is and where price action goes, in reference to that opening print, we usually like to get into calls if we get higher lows above the opening print, and we like to get into puts if we get lower highs below opening print. But in this case, we gapped down, and the gap down wasn't that big, but the move from the close was pretty big, right? The overnight move was rather large, right? So we closed at 34.20 yesterday, and we opened at 32.44, right? So this price level right here is 32.44. And so that's almost a $2 drop, and then you bring into account another couple of things here. We've got the gap, but we've got last week's 50% line, this dashed purple line, and we've got this hourly broadening formation down here. And we know that we rejected off of this hourly downtrend line that we have here. So it's running kind of parallel to the broadening formation that we've got down here. So we knew it was a probable bounce point. We talked about in last night's video that a pullback to last week's 50% is totally justified right after the run that we've had, and would really just kind of confirm support if we were to get a bounce there. So with that, we would get a gap close most likely, right? Because you're not going to just bounce right off of the last week's 50%. But so we did get basically the gap close. It didn't close all the way. It actually did leave a little bit here, but it bounced where we have the 50% line, intersecting with the hourly broadening formation. And so instead of taking this lower high on the 1 minute, we wanted to look for something to the upside. And that's what we got. We got the higher low above last week's 50%. So once price cleared this higher low right here, this candle right here, we entered calls. We did end up getting a higher low, and then we got that shot up to previous low a day. We continued to get higher lows and higher highs, right, until we didn't. And then once we got the lower low, we exited the position, and we got a pretty good chunk of change there, right? We did leave one runner for any other action. Now, it did get stopped out once we started making this broadening formation and making lower lows. So weren't too worried about that. That still was great profit for us. But by that time, you want to start, collect yourself, zoom out, take don't get locked in on a 1 minute. Take perspective of where you are. So we're up here at that point, and we get the further push up, and at this point we get a higher low on the 15 minute. Now that is above the opening print, but it's also above previous low day. So that's a pretty bullish signal from a scalping perspective. Again, higher low above opening print. This is more in our wheelhouse. This is what we consider a less risky play than the buying the call below opening print. So this is right in the wheelhouse of our scalping. We entered at the high of this higher low candle, and then at that point we want to get a good exit. So we zoom back into the to the 1 minute, and come on, Thinkorswim, went a little bit too far. And once we were able to get that big push up, there was a higher low in the midst of this on the 1 minute, but that was kind of beside the point. We got the push up to the 4-hour trigger to the downside and this 1-hour downtrend line. So at that point, we were ready to, lock in our stops. And sure enough, we got a lower low. Now it was after a higher high, so it was just creating a broadening formation at that point, but we were fine with the profit that we got. Not only did we take off the second set of calls that we got, we exited that full position, but we were able to exit it with full profit on both the trades that we took. So that's how our day went. Now if we zoom back out and just kind of look at how things continued to progress throughout the day, we got the push up and it continued to stay up, right? If we look at, well, there was one threat. We wanted to look at the 1 hour because we were rejecting off a 1 hour downtrend line, and we did get a lower high on the 1 hour. Yeah, right here. So let's zoom out a little bit. And so you can see here at the 10:30 hour, this is Central Time, so it's 11 Eastern. We had this 2 up, followed by an inside candle, but then we got the 2 down there. So that locked that in as a lower high. So if you wanted to, you could enter into puts. Now, again, this is on the hourly time frame, so not so much an intraday trade, but more of a swing or, overnight at least, or even possibly a multiple day or even a week or more swing, depending on the expiration that you get. I wouldn't buy an expiration for next week if you're looking to swing it through next week. I would look at like an October monthly. You could enter puts there because that is technically a lower high. Now this is a higher low. Lower high is what I said. We did get countered by a higher low, but at this point, it hasn't created a higher high yet. So for all we know, this could be just consolidation. We could continue to make lower highs and higher lows within this consolidation right at the week flip, right? And then it could go either way at that point. We're still below last week's high, this solid purple line, so we're within last week's price range, and we're teetering on that week flip there. So if we go below 33.20, then we're flipping the week red. So we want to keep that in mind, because from the week perspective, actually let's just take a look at the day perspective first before we get there. So again, yesterday we were talking about how although we did get a green hammer, it didn't necessarily mean that we were going to get a move to the upside today. So, and that was present here. We got another failed 2 down. Not so much a hammer, a bigger body on this, but still a lower wick, and it was green. So, we closed above where we opened. But from a day perspective, we've got to keep in mind we have technically triggered this kind of sloppy 3 to combined 2 up, combined 2 down. That would have a magnitude of basically last week's low. I don't know that we would get to that tomorrow, but look at the move we had today to the downside to begin with. It is certainly possible that we could get to that level, so we want to keep that in mind. There is still, again, a slight gap left. Yeah, there's a slight gap left today from today's movement. So that could be a little bit of a magnet to pull us down again back within this price range. Now, the market maker's expected move low is here at this 30.01. If you're not familiar with that number, check out our weekend video where we go into a little bit more depth of where we get that number and how we put it on the chart here. And we are contending with this weekly broadening formation, right? Like, we poked above it. This is just from a daily perspective. From a weekly perspective, this is basically a wick that we've got right here. Maybe a little bit more than a wick because we pushed back up today. But let's go ahead and look at the week perspective. Let's go with, so we've got this, poke through the weekly broadening formation that we got. The poke through once, we pulled back within, we're pushing back up again. So looks like we're clearing this, but we got to still keep this broadening formation in mind. We could fall back below it tomorrow, and if we do, we got an inverted hammer. It'd be red at that point as well, and we could be looking at more action to the downside next week, right? But we're not going to get ahead of ourselves there. We'll play price action how it comes. If we do get upwards price action tomorrow, this gives us more of a hammer type of candle, or at least a bigger body. on the top than, or less wick on the top than there is the bottom. So that's more of a bullish indicator. And if we can close outside of last week's high, that gives us even a little bit more bullish momentum as well. So I want to keep that in mind. If we do break through this weekly broadening formation, we still got this one here. We may just get a slow creep up, try and close this gap at the very least, make this higher high on the was it 36.15. We've talked about this for multiple nights in a row now, targeting this level because of multiple time frames. But yeah, that's what we're looking like from the week perspective. We've made a pretty darn good recovery from this April 7 low, bouncing off this monthly broadening formation and this making a quarterly broadening formation. So we've got back up into last year's price action. If we look at the month and take off these, take off these broadening formation, the weekly broadening formations at least, we can see we're doing well. We're still doing well. We've got the bullish engulfer last month, the green 3, breaking through this weekly broadening formation, coming back up within last year's price action, keeping the month and the quarter green, flipping the year green, so we're in full time frame continuity. If you take a look at the upper left hand part of the chart, you can see we've got the month green, the quarter green, the year green. We've got a good solid green candle, a little wick at the top. That's not too big of a deal. But again, here's another sloppy 3, combo 2 down, combo 2 up. Target being the high of the 3, which is that 36.15 level. So that's again the main target for right now for the bulls to the upside. Once we reach that, we can look how price action moves at that point. From the quarter perspective, we got another strat that would trigger. So we could just see continued upward price action through the end of the year, but we haven't really seen any seasonality yet. September, October are usually the worst performing months for tech. We haven't really seen that weakness here, so maybe the seasonality has been pushed back a little bit. Did we get all of the seasonality earlier in the year from a tech perspective at least? Even though it did affect the whole market, we just got to keep in mind that there could be that little pullback that we've been waiting for but haven't seen. So we've just continued to play price to the upside. From the quarter perspective, again, doing real well. We're in this 2 down, 2 up. The magnitude is that 36.15. If we reach that 36.15, again, that triggers another strat. That's this 1 combo 2 down, 2 up. The target would not be the high of this 1, but actually the high of the candle to the left of the 1. So that's that 70.08. Again, it wouldn't happen this quarter. Probably wouldn't happen next quarter. It might not even be until like quarter 3, quarter 4 of 2026 if price just really grinds slowly to the upside. But that would be the ultimate target, is that 70.08 if price stays above this 36.15 level. From the year perspective, we've talked about how we've turned this around. We had the 1, 2 up, 2 down trigger. The magnitude was the low of this candle here, this 621. Didn't quite reach it, got to the 723, but that's not such a bad thing because it's basically completed the strat. Yeah, we did leave some gaps here on the way up, but we've hammered back up from the year perspective. So if we can continue this through the end of the year, we're looking at a possible 2 down, 2 up situation next year, targeting the high here, 70.08. And not only does that trigger, but it gives us a higher low in this case, right? 621, 723, that's technically a higher low. So we continue what would be more considered an uptrend, even though it's moved pretty sideways. If you really look at it from a high time frame perspective, we opened here in 2021 and we're basically still at that level here in 2025. So just got to keep all this stuff in mind and play price action how it comes. For right now, the bulls look like they're in control, and that's how things are going to go. Let's look at the market maker's expected move. To do that, we look at the options chain for this Friday or for this week, and we can see over here, this is Thinkorswim. On the right hand side, we see this plus or minus 1.576. So there's an expected move of $1.5758 basically by the market makers to the either to the upside or the downside of our closing price of 33.85. So if we go to our notes and we see Got to update this. So 33.85 was the close, right? And if we do 33.85 plus $1.58, it gives us 35.43. So we'll go 35.43, and if we go 33.85 minus 158, that's 32.27. All right, so we would go out here and mark on our chart. All right, we would just put a marker out here for, was it 35.43? Almost to it. We'll put mark makers expected move high. We'll label it orange because everything in orange is from a day perspective on our charts. And then we've got 32.27. Right, and this is the market maker's expected move low. Right, so we've got those two levels marked out on our charts here. Right, so we can see that there's an expected range of price action between these two levels here tomorrow. So pretty restricted range, right? After the big move today, maybe it's just a day where the price just digests that price action of at least the overnight or pre-market before market open today, and then today's price action. So if we look at it really from the bottom to the top, the bottom was down here at 31.36, and we got as high as 34.06. So $3 price move. You can see how just 35 cents is 1% in the underlying ETF. So had a pretty big day, pretty big move intraday for the ETF, and so tomorrow's expected move is a little bit tighter. Let's go ahead and look at our 4-hour markers and our triggers and targets. Let's go ahead and start from the scalp perspective. We'll bring up our scalp chart. Oops, thinkorswim, come on now. There we go. And we can see right now we've got previous high of day. So the 4-hour markers are overnight high, previous high of day, overnight low, and previous low of days. Now overnight low and overnight high are going to change by tomorrow's open. So we're just taking them for what they are right now. And we'll just show how they're used in this repeatable strategy, right? Then we've got the previous high of day. Who knows? Say we open up down a little bit, right? So say we open up at 33.28. If we get price action that moves up, maybe we get a rejection at this 1-hour downtrend and 15-hour downtrend line, and price action comes back down, but we get a higher low above opening print. I'd be open to calls here, hoping that we break through this trend line after hitting it multiple times. They say the more times you hit a level, that the weaker it gets. So, taking that higher low, targeting previous high day as your first target, and then overnight high as your second target. Now, if you exit your full position there, it's up to you or not. You can leave some runners. You can continue for further, targets that you may have. We'll go over our intraday targets and our swing targets here in a second. But from a pure scalping perspective, we want to look for higher lows above opening print, and we want to target previous high day and overnight high. If we get opening print here and we get, pushed down, come back up, say we reject at the week flip here, and it we flip the week red and we get a lower high underneath the opening print, then we're entering puts looking for overnight low first and then previous low a day. The gap closes right there too, so you might want to hold on to see if we get that gap close. But it is also kind of coinciding with this week's 50% line, so we bounce there once. How long do you really want to hold on to see if we get that gap close? If we're not getting it immediately, right? And you might want to just go ahead and exit. So that's how things look just from a pure scalping perspective. Oops, let's go ahead and remove that. And let's go ahead and look at our intraday perspective. Slip to the 4-hour chart. Oops. All right, so from the 4-hour perspective, you can see here, down here to the left is our 11 weeks of of sideways action, right? From 23.50 to 28.29, right? We finally broke out of there. Got a little retest intraday of this 29.66 level, which was the high of that range that we were in for 11 weeks, and then we shot off. So we talked about in the last few days that a pull back to this level to get a bounce and show, turn this what was resistance into support, is fully warranted. We were looking for that, and it came overnight, mostly yesterday, so we weren't able to really capitalize on the downside intraday, but we did get that move, and so there, we could continue to get a further move down. If we do get push down tomorrow and we break below the low of the second 4-hour candle of today, that would give us a 2-1-2 down reversal, and we would enter at the low of this 1 and be targeting the low of this 2, right? So it's the 2-1-2 down, very clear entry, very clear exit. You could leave some runners for the gap fill and maybe the push down. At that point, you're already below the market maker's expected move low for the day. It's not an end all be all. It doesn't mean price can't go below that level. You may be shooting for the market maker's expected move low for the week, which we have here at this 30.01. So, if you want to leave a couple runners looking for that level, so be it. That's up to you. If we do get price action to the upside, we've got a 2-1-2 up. Not a lot of magnitude on that move, but that would trigger the 1-2 down combo 2 up, which would give us a magnitude of this candle. But if we breach that, it's again kind of a domino effect of this combo 2 down, combo 2 up. That would give us a final magnitude of this 35.30, which was the high of was that Tuesday. So, if you do get that price action, break above last week's high, you get that domino effect, you get some momentum going, you get people, saying, that was just the dip, so buy the dip. Could get that good momentum tomorrow, moving up, getting that expected market maker's expected move high for the day, possibly even breaking through and testing that market maker's expected move high for the week. All right, so that's it from more of an intraday level than a little bit longer level than a scalp. If we want to look at it from the day trade, overnight swing, possible couple day swing perspective, again, we've got this 11-week range right here. We've got the breakout. We have not tested it from a day, anything longer than an intraday perspective, right? The day after we broke through it, the day after we broke through it, we did test it intraday, but we never closed below it. We just, popped back up, and then we continued on from there. So do we want to call that a retest of that level to turn it into support? Again, just from an intraday perspective, that's the only way I'll really look at it. I will keep a further test of that level on the board, in the back of my mind that could be a possibility. So if we do get the downward action, again, we've got a real sloppy 3 combo 2 up, combo 2 down. So if we get price action below today's low, we get the gap fill, and we're targeting that market maker's expected move low, the last month's high, that type of area for a bounce. If we do get the breakthrough, we're targeting last week's low, which is reaching magnitude for this 3 combo 2 up, combo 2 down. So I don't want to totally take it off the board, say that won't happen. Today was a pretty bullish day. Market makers expected move low for the day and the week don't even go that low. So do we get a move all the way down there? Not sure it would happen in one day. So that may be something that you want to buy an October monthly for and swing it over the weekend if you really think that price action is going to continue to move down, or at least reach magnitude for the 3 2 up 2 down. If you think that we're making just a higher low from, well, actually it wouldn't be a higher low. If you think that we are just making a broadening formation, let's get out the right tool. If you think we're going to go higher than today's high, and we're going to create this broadening formation here from the day perspective, then that would trigger at today's high, that 34.06. You would be targeting yesterday's high, and then ultimately Tuesday's high, which is the high for the week, and the high where the market maker's expected move high is. Could get a little poke through and test that market maker's expected move for the week high and get some action up there, but who knows? That again, that's a pretty big day. after a big day like today, you do sometimes see just some consolidation to let everybody digest that move. So I don't know if we'll make it all the way up there, but if we do, at the same time, it wouldn't surprise me, and we've got our triggers and targets ready. So speaking of triggers and targets, let's go to our notes so we can just get a little visual with the numbers here. Again, this is for Friday, September 26th. There will be 65 trading days left in 2025 tomorrow. Previous close is really today's close, right? So we closed at 33.85, and then we've got in our notes here what it would take to flip the week red, the month red, the quarter red, and the year red. We've also got our expected move, market makers expected move for the week that we had already charted out. Today we went ahead and got the market makers expected move for tomorrow. Went ahead and charted that out as well, and we can see where we have gaps above and gaps below. And actually this is 31.36 because that gap almost got closed today. So that's where the gaps below are. From the 4-hour perspective, like we talked about, if we go to the downside, that's a failed 2 down, green 1, 2 down. That's a 32 triggering at 32.59 with a magnitude of 31.36, and we've got some extended targets of 30.45 and 30.01. To the upside, we would have a failed 2 down, green 1, 2 up, with triggering at 34 flat with a magnitude of 34.06, which isn't that big, but again, that create this domino effect of combo 2 downs, 2 ups, with extended targets of 34.39 and 34.53. We did talk about how if we do get above this 34.43, 34.53 area, we could look for that 36.03 as well, the market makers expected move high. I just didn't want to put too many extra extended targets on the 4-hour because they really just roll into the day targets that we have. So in the day perspective, we looked at that as well. We would have a 2 down continuation, triggering at 31.36 with the target of 30.45, 30.01, 29.66, which is that month high, last month's high, and then finally 29.19. If we get price action to the upside, that's a failed 2 down. Oops, if we can type our notes right, we've got a failed 2 down, 2 up, triggering at 34.06 with a magnitude of 34.39 and extended targets of 35.07, 35.30, and 35.39. Again, from the week perspective, we looked at the week, the month, the quarter charts already. I don't want to drag this video out too long, but I'll just go over the numbers again. We have triggered the 2 up, and it is still in force. That's why this is underlined and in bold. Underline means it's triggered. Bold means it's in force. So we're above 34.14. Actually, you know what? I don't have that right. We're not in force anymore, right? Because the 34.14 would keep us in force. We're at 33.85. So we're at a 2 up. We triggered. We hit one target, but we're still targeting this 35.95. If we were to go red 3, we've got, that's what, $5 more to go. So I don't think that would happen tomorrow. But if it were to, it'd have to get all the way down to this 28.92. A red 3, again, is a bearish engulfing candle for anyone not familiar with the strat. From a month perspective, we are still in force with the 3-2 up. We remember that that's a very big green candle on the on the month perspective. That triggered at 29.66. We've already hit 2 targets. We're shooting for this 35.95, which is also this target from the week perspective. But then we have the ultimate target, or the higher high on the week perspective, of 36.15, and the higher high on the month perspective as well at that 36.15. That rolls into the quarter, which is in the 2 down, 2 up, triggered at 25.84, but that magnitude is at 36.15 that we were talking about as well. So you see how it plays in on the quarter, the month, and the week. So that's really what the bulls are shooting for at the very least, is at 36.15. If we were to go red 3 on the month, 22.57, don't think that's going to happen. The month's almost over, so have to have a really big dip for that to happen. From the quarter perspective, same thing, 7.23. We're not going to get that this quarter. Well, there's 1 month left. I don't think we're going to crash that hard in 1 month, right? So, anyways, we're at a 2 up, 2 up, or 2 down, 2 up, trying to reach that magnitude of 36.15. If it does, it triggers that 1 combo 2 down, combo 2 up. Ultimate target is at 70.08, but that's a huge move. So the extended target's on the way up. We'll start with 38.89, 42.04, and 44.54. On the year, again, we've turned it around. It did trigger the 1, 2 up, 2 down. Didn't quite reach its magnitude of 621. So not really looking for the green 3 because that's a long way to go. I don't think that's going to happen this year. But at this point, it's a kind of a win for the bulls that it triggered and it's no longer in force. We're above that 2350 level, and not only are we above that 2350 level, but the year is back green at this point. So it's a green hammer. We're looking pretty bullish. So that's it. There you have it. Those are your triggers and targets. If you need more time, go ahead and just pause the video, maybe rewind if you need to. But try not to make this video too long and still cover a lot of information. If you have any questions, please leave them in the comments. We'll be glad to answer them. If you've got any comments, for improvements, try and keep them respectful if you can, but go ahead and leave those in the comments as there. We're always open to improvement, but we just want to make sure that we bring you guys good information about a great ETF that can be used to make pretty good money at a pretty low risk in the options market, right? The high delta to low theta for the amount of premium that you have to pay is pretty low. So with the high beta ETF like SOXL, you can expect decent moves every day, and which is the reason why we use this repeatable strategy to make money every day with this, right? We can do the same with other tickers, but we thought this was probably the best one to really focus on due to, it's a great trade for beginners and seasoned traders alike, right? It's for seasoned traders, it's kind of like taking candy from a baby with the delta theta that you're getting for this premium, and then for the beginner trader, it's a great entry point. So SOXL has been around for a while, nothing new. Plenty of people know about it, but plenty of people still don't. So we want to spread the word about that. We also just want to spread the word about the strat and our nuanced layers to the 4-hour levels and triggers and targets that we have for our scalping and swing trades. So just want to get that information out there as best as possible, help as many people out as we can. It's really the focus for this channel. So give us a thumbs up if you like this. If you're still with us at the end of this video, thanks so much for staying along for the whole ride, and hope you get some good rest tonight and wake up refreshed tomorrow. One last day of trading for the week, so let's keep it good. Keep our portfolios on the green side, and good luck tomorrow.